Hello everyone, welcome back. I got some really good ones for you today on this Friday, January 26th, 2024. Lots been going on with the markets. That's what we're going to be focusing on for today's video. So welcome back, glad you made it, glad we could hang out together, and let's dive right into these markets, shall we? So first order of business, we're at video 91, started this channel about a year and a half ago, yet to do any crash calling, you guys. I'll be the first to let you know if I think a stock market crash is coming, but video 91, haven't called for it yet. Two of the three major stock indices hanging out at all-time record highs right now. That third, that NASDAQ, closing in on all-time record highs. So does this mean I've defeated the other at least 75% of the other YouTube grifters out there? Am I, hopefully you're getting some out of these videos, you guys, and cheers to all-time record highs for the stock market. Cheers for the Bitcoin ETF getting approved, seeing Bitcoin test 50,000 the other day before ultimately selling off. All things we'll discuss, but good things happening for markets, for crypto. Awesome. If that 10-year yield, we'll start with really like to lay the framework for what's going on here, the groundwork. Well, look at that 10-year yield right now, that 10-year yield in the bond market hanging out at 4.15%. If I had just looked at the 10-year yield today, I would have guessed stock indices would actually be selling off. We've talked in these videos about how if that 10-year yield keeps creeping up, it'll start to perhaps put downward pressure on the three major stock indices, but we haven't seen it, guys. Now, going forward, I want to see that 10-year yield come down. If you're bullish on markets and risk and you want to see the stock market keep moving higher and Bitcoin keep moving higher, you're going to want to see that 10-year yield come down from 4.15%, in my opinion. And if you're bearish on these markets and you think the markets are going to give some back, you're going to want to see that 10-year yield keep climbing from 4.15% to call it like 4.5%. That could really send the three major U.S. stock indices, moving lower. So kind of giving some back as yields become too high, the dollar becomes too strong. I believe ultimately the 10-year yield is going to begin to move lower. And I think rates are going to begin to move lower too. I think this is going to make inflation worse. I think it's going to make the dollar weaker, and I think it's going to do what it's been doing to risk assets, sending them into the nosebleed, because it's requiring more and more weak dollars to buy the same share of the S&P 500, if that makes sense. So we do have a yield curve right now, going along this theme of yields and rates that we're discussing. We have a yield curve right now that is inverted. The yield on the 2-year is 4.35%, and the yield on the 10-year is 4.15%. So that 10-year yield is lower than the 2-year yield. That's an inverted yield curve. You want a healthy upward sloping yield curve where the 2-year yield is lower than the 10 and the 10 is lower than the 20 or 30, or as you move out in maturity, you want those yields to be upward sloping. As you move further out in time, you want the yield to be higher. That's kind of it makes sense, intuitive, that you locking your money up for longer, you want more for it. But we have an opposite situation, an inverted yield curve. You look up the yield curve, people will tell you like it's accurately predicted every recession since 1969, and so we're inverted now, so the recession is coming. That's true, but let's add some caveats to the inverted yield curve, because people don't, people only look at the yield curve like whenever that inverts, you're going to have a recession. But let's break that down a little bit further. First of all, when you have a yield curve inversion, you wait actually for the yield curve to become uninverted, then you have the recession. So an inverted yield curve on its own doesn't necessarily mean you're going to have a recession until that thing uninverts. Second caveat is whenever you do have a yield curve inversion, it's usually 12 to 18 months until the recession comes. So it's not like the yield curve inverts, you have a recession tomorrow. The yield curve inverts, you have a recession, 18 months later kind of thing. Another caveat with the yield curve is a lot of times it inverts and nothing happens, right? Just like how you might have storm clouds, it might have storm clouds but no rain. You might have an inverted yield curve, but it's a false signal. You don't end up with a recession. But you can't have a storm, a recession, without an inverted yield curve, without those storm clouds. So it is true that we've never had a recession in this country without an inverted yield curve happening before it. But sometimes we have inverted yield curves, no recession comes. Sometimes you have an inverted yield curve, you got to wait for it to uninvert to have the recession. Sometimes recession doesn't happen for like 18 months, 2 years kind of thing, So be careful with that inverted yield curve talk if you're a bear. But, the yield curve remains inverted. So there you go. Kind of discussed yields and rates with you guys. Moving on to that Bitcoin ETF. So the Bitcoin ETF got approved. I set you guys up pretty well in the last video discussing how that would go. Pretty much everything I said would play out, played out, with the exception that it was a buy the rumor, sell the news event, which I said everyone was saying it was going to be. So I wanted to bet opposite for that one. I kind of wanted to zig when the market zags, because normally markets move on in a buy the rumor, sell the news type fashion. So by the time you've read the headline, you guys, generally you see a lot of selling because everyone bought the 6 months prior for that reason. So when you get your Bitcoin ETF approval or headline or whatever it is, it's actually, you know, we sell off. So, but usually that happens, but I thought it'd be an exception with the Bitcoin ETF getting approved. I thought we'd just take out all the bears and the people that sold that. And I was wrong. We pulled back a little bit. But I said in the last video, if Bitcoin did dip, to go ahead and buy that dip. I bought the dip a couple days ago when that chart broke and Bitcoin was down there at 38.5 that morning. I was in there buying altcoins, you know, having all sorts of fun. So buy the dips or don't. I don't do buy or sell recommendations on this channel. Never will, never have. But, you know, things I'm doing, buying those dips: Pepe, Chainlink, Solana, Avalanche, XRP, Bitcoin, Ethereum, Harry Potter, Obama, Sonic, 10 Inu. I kid you not, bought some of that. So we're just gonna have to see. Bought the dip. Cramer, though, meanwhile, saying to fade Bitcoin. He's calling it toppy. Jim Cramer over there at CNBC calling Bitcoin toppy and overinflated, and we need to sell off. Yeah, we'll see, because you know, check out my inverse Cramer video from a year ago when Cramer was saying to recession-proof your portfolio and run away at NASDAQ 10,000. Fast forward a year later, guys, we're at 15,500 on the NASDAQ. So at that very moment, Cramer told you to like run away and hide and get really tiny and move to cash. That was about a year ago. He ate complete doo-doo on that. And now he's saying Bitcoin's toppy, Bitcoin, we'll see. But I'll always be inverse Cramer, you guys. I'll always take the opposite side of that guy's trade. We love you, Jim. We love trolling you, but we do love Jim. All right, we do. But let's give him a hard time. You know, tell Jim Cramer, tell me you're short Bitcoin without telling me you're short Bitcoin. You know what I mean? And I'm gonna buy that Bitcoin. So let's get rid of these shorts. Let's push these bears out. Let's get these bears scattering as they have been since October of last year. You know, if you had told me back in October that Bitcoin was going to test 50 in January, I would have laughed at you. Everybody would have. And here we are. So the bears have scattered, and you know, I'm stacking sats, buying the dips, and nothing's really changed for me. So Cramer says to fade Bitcoin. I don't know about that, but we're hanging out at 42 right now, and I'll be curious to see, will we hit 45 or 35 first, you know? And I've watched Bitcoin, well, a lot. It generally likes to get stuck at 42 for like a month. It likes to think about it. You know, those major support and resistance levels, so like 10,000, 20,000, 30, 40, 50, we like to get stuck there. It kind of turns into a game of tug of war. Like, is Bitcoin at 42,000? I mean, like, you can make the case that it's overinflated, and you can make the case that it's still incredibly undervalued. So we get into these like month-long tug of wars that end up being like a kangaroo market. But if Bitcoin were to trade sideways, I would not want to be a bear for that. You know, you're on borrowed time when you're a bear. But that's a different topic for a different day. And hey, you know, if you're thinking Bitcoin's going to go down to 32 and you're a bear and you're shorting Bitcoin, you know, I wish you luck. I hope you win. I want you to win. But do I think it's going to happen? We'll see. So good luck. Good luck. Seriously, I want you to win. That's what this channel's for, you guys. If I'm like not coming through with the punchlines and I'm not engaging or entertaining enough, just keep in the back of your mind that I'm coming out here so that you win, okay? So if you're looking for cheap laughs or something else, like, you know, YouTube is a very wide and deep well. But if you're looking to just cut out the noise, focus on the things that are important and the things that the clowns are trying to get you tripped up on, we'll come here and let's win together, right? You know, so drop a comment. What you're into, what you're seeing, what you think's going on. You know, I'm certainly I'm not too old to learn new things, guys. I need to be learning new things. You know, I need to be the dumbest one in the room. So please let me know in the comments what you think about it. Really anything we've discussed so far, you know. So yeah, sentiment in crypto has dipped lately, but you know, not really too worried about it. And I don't think it's going to dip to the low sentiment it was at in like September of last year, which the sentiment reading was like 39, really low, really bearish. And then we popped like 72. We've now backed off to 50. I think we're going to start moving back up, because what it would take, in my opinion, to get down to 39 again for sentiment in crypto would be like 40 interest rate hikes in a row, like the Fed served up to us for the last couple years or so. And those are over, guys. You know, the market is really pricing in. Is it going to be 3? Is it going to be 7? How many interest rate cuts are we going to get going forward? Making these markets giddy. Moving on to energy, we got oil at 77 a barrel right now. I would think oil would be at like 110 a barrel, given the weakness in the dollar and what's going on, in the Middle East. Things are becoming really unstable. So I'm surprised to see oil all the way down there at 77 a barrel. It's almost like oil was trying to price in a recession later on this year. But what I'd say to that is, if oil was trying to price in a recession for 6 months from now, like oil's been selling off this last few weeks or so, well, by the time that recession hits, we'll be weakening the dollar, and I think oil will be on its way back up. And if we don't get a recession this year, then we're going to have a little bit of growth, and I think that could get oil back up there to like 90, 110 a barrel. So regardless of what happens, I'm tentatively bullish energy, and we'll just have to see. But I'm looking at that Exxon under 100 a share, Chevron under 150. We got ConocoPhillips hanging out around 110, Halliburton around like 37. Moving on from oil, we can discuss tech. We have the NASDAQ right now hanging out around 15,500. So of the three major U.S. stock indices, kind of underperforming the most. But that's just because it's not at all-time record highs yet, you guys. And I think 2024 is going to be a good year for tech, so tentatively bullish. That NASDAQ bullish. Rivian, you can take a look at EV maker Rivian. Wanted to bring to you guys attention at $15.32 a share. Guys, we have yet to discuss Rivian on this channel. So the first time I'm pinging you right now, take a look at that Rivian at $15.32 a share. Not a buy or sell recommendation. Everyone's at a completely different place in life, but I'm buying Rivian, okay? So buying Rivian, we're doing it. $15.32 a share. Let's get some. Distressed capital. Rivian's been terrible to every shareholder. Like if you had bought the IPO at 130, gosh, you're down like 80, 90%. But I think I don't own any yet. So I'm about to own my first Rivian at $15.32 a share, guys. Pretty stoked. So take a look at Rivian. Tesla came down 12% yesterday, hanging out right now around $183 a share. Take a look at that. I'm going to buy some Tesla. I like Tesla. I like Rivian. NVIDIA is pricing in the AI singularity, it would seem like. Like, NVIDIA is just going straight up, guys. 611 a share. Seriously, it's like the market is priced in the singularity for AI. That moment when AI becomes just so advanced that it can kind of build on itself, create self-improvements, and it just takes off. It's like a positive feedback loop. It's like a self-licking ice cream cone. It's like one bull in a herd starts to stampede, and they all start to stampede. So I think at a certain point, AI could hit this point where we completely lose control of it. It just takes off, and then our lives aren't even recognizable in 5 to 10 years. Like, I'm not talking about like AI takes over and we all have just supercomputers and don't need a lot of people. I'm talking about like our lives aren't even recognizable in 5 or 10 years. Like we hit an AI singularity, fast forward 5 years, and you're like a goldfish in a bowl of jelly. Like, because think about it like this, you guys, when the supercomputer upgrades itself and then that supercomputer gives itself an update, what do you become? What do we become? iPhone 4s, legacy tech, you guys. So once the update gets an update, they don't need wetware anymore. They don't need the human resource, right? But anyway, it looks like NVIDIA is pricing in something like that, something big, something like Bitcoin, something like the discovery of the internet, crazy. So NVIDIA's been a real high flyer. I would say if you don't own any, you could buy like 1 or 2 shares. Keep in the back of your mind, maybe I want 5 to 10 of these things over the next few years. So if we rug down, you can average down. And that way, if we keep moving up, you don't miss the boat. If you do own some, you could sit tight and stay right, or you're overweight and you're actually looking to lighten up a little bit. See, we're all at a different place in life, you guys, but I like NVIDIA. I think now that it has a market cap of 1.5 trillion, that's going to be a very difficult market cap to displace, meaning they're in the $1 trillion club now. They have a seat at the table. They're like a FANG. They're like a Magnificent Seven stock, NVIDIA is now sitting next to Apple and Microsoft. This bird agrees. This bird is telling me straight up, stay long NVIDIA. Look at maybe some of these other AI plays. I think Tesla has a game, a hand in this game. I think Apple does, Microsoft does. So start looking at some of those AI plays or not. They've been flying high, so it's hard to, it's hard to tell you like YOLO in now. What's crazy is I did a video about a year ago, AI wars begin. And I highly doubt many YouTube grifters were talking about the AI wars beginning when I pinged y'all on that. Because I was, messing around with ChatGPT before most people were really even knew it existed or what it was yet. I was like, wow, this is the smartest AI chatbot ever. Like, this is crazy. So anyway, we talked about the AI wars taking off. And I hope you haven't missed the boat, you know. One thing though is I did talk up the metaverse this last year and a half. We ate doo-doo on that, you guys. That metaverse is on life support, but hey, maybe you're bullish and constructed the metaverse is something you could look at. I'm not. I still think the metaverse is the future. We're just in a heck of a bear market right now for the metaverse. So you can look at the metaverse, you can look at AI, you know, you can chase those NVIDIA gains or not. I'm gonna leave that up to you, but I certainly have NVIDIA on my radar, certainly Tesla, Rivian, kind of get the idea. So war in the Middle East expanding, that sucks, right? It looks like the Houthi rebels are firing a bunch of rockets at Israeli ships, U.S. ships, anybody that's in the coalition that supports the West or Israel is pretty much getting targeted by the Houthi rebels in Yemen. Then you got Hezbollah to the north of Israel. Then you got Hamas in Gaza City. So, you know, all kind of backed by Iran. Iran is kind of like that common denominator, you know, fighting a proxy war against the West. And then the U.S. is kind of the common denominator for Team West. We're bankrolling all these wars that we don't want to get involved in, but we'll just, you know, fight a proxy war for ourselves. So it looks like Iran and the U.S. are in a proxy war. And you know, we talked about it on this channel. World War III may have already started when Russia invaded Ukraine. And who's backing Russia? Iran. So you see, Iran is like backing up everybody. And the United States is backing up everybody that's against that. So you see, guys, we're kind of in World War III. We're heading that way. Now, bad news is freaking World War III. And things are getting, you know, completely unstable. The good news is it's good for it's not good news. It's good for stockholders. Okay, I hate to say that, but it's totally true. Show me a Dow Jones component that doesn't love war. You know, the beast system's favorite meal is like human flesh from war, and then I'd say its second favorite meal is the meat of the middle class. So there you go. The beast system loves these kind of things, but you know, things do look to be getting increasingly more unstable. Looks like Russia might launch an offensive into Ukraine too, but we'll just have to see about that. In my opinion, I'd assign maybe a 35% chance Putin finishes the job and takes the rest of Ukraine, and then I'm you know, pretty much 65% sure that he's gonna just kind of keep what he's taken already, fortify it, chill. He considers those people Russians the whole time. I'm not saying right or wrong, but he would say those people in eastern Ukraine were Russian-speaking people whose parents were members of the Soviet Union with Russian passports, and these people don't want to learn Ukrainian, that it's not in the culture. And so looks like Putin's going to keep that section he's taken. And it looks like Putin's going to be able to hold on to the Crimean Peninsula and keep NATO missiles from being right on his border, you know, that kind of thing. I see the lines just kind of staying still. Okay, so a demilitarized zone, maybe something like North Korea and South Korea. Like, I'm 65% sure that's how this is going to end, you guys. Just a line that maybe has intermittent skirmishing and fighting, but otherwise, like, the lines are pretty much firm. Everyone's pointing guns at each other. Nobody wants to make a move. This bird brings up a really good point. The bird is trying to tell us that any side that attacks between the Russia-Ukraine conflict, you know, they incur exceedingly high losses. It's almost like there's such a stalemate, kind of like in World War I with that trench warfare, where the invention of crew-serve weapons kind of stalemated the board. Like, you know, and before World War I, everyone could just charge, and then like 100 people would charge at another 100 people. But once World War I hit, that kind of fell apart because you had like two guys on a machine gun, one feeding the bullets in, the other like shooting the thing. You had these crew-serve weapons, you know, and technologies advanced faster than just mobility and old tactics could advance, and it just kind of jammed things up. And now we're seeing something similar in Russia and Ukraine, you know, a bit of a World War I style, like trench warfare, no man's land. Technology on both sides is rendered attacking pointless. You know, we're seeing something like that. So I think it's just going to keep fizzling down. But I can certainly sense, though, that the U.S. is pretty well over it, and they've read the writing on the wall. Ukraine's lost 3 of its armies and doesn't really have a 4th to come up with. You know, they lost the 1st in Mariupol, the 2nd in Bakhmut, and the 3rd on their failed spring offensive. And I think the U.S. government is getting to the point where they're like, we're done throwing good money after bad. Like, this didn't work out. But we'll just have to see, you guys. But horrible. You know, I believe in adequate defense of the coastlines and nothing more. So I don't like any of these interventions. But hey, the stock market will like them. Inflation will like them. The beast system will like them. You know, just kind of is what it is. So all things to keep an eye on, you guys. But I'm bullish. I remain bullish, okay? All the things we talk about on this channel, energy, high growth tech, precious metals, crypto. Yeah, nothing's really changed here. So we're just going to keep going, all right, you guys? We'll reconvene as things progress. Like, subscribe, comment, share, whatever. You guys are awesome. And we're just going to keep going, all right? Till next time.